Markets also digesting the president's latest comments, pressing Chair Powell to cut rates once again. Rick Santelli is here with more in the Bond Report. Hi, Rick.
You know, it's been a real interesting past few days here, especially if you're watching the long end and the yield curve. Today, for example, if you look at twos on the week, they're up several basis points. You look at tens on the week, they're down several basis points. Now, that's not a lot, but how that's occurring could be significant. Look at twos and tens intraday on one chart. You see how the orange line is leading? Yes, the 10-year and long end in general really took the lead in pushing rates a bit lower today and flattening the curve. And the yield curve, there's some secrets here. Let's look at the 2s-10s curve for the month of July. Notice how it was steepening, and then right around the 15th and 16th it changed. What occurred on the 15th and 16th? CPI and PPI. Once they were behind us, the yield curve stopped steepening, long-end rates stopped leading rates higher. And that is significant to pay attention to. In foreign exchange land, well, euro is the new king. Whether it's the euro yen or the dollar yen or the euro versus dollar. Now, let's look at the euro yen versus dollar yen on one chart. This chart goes back 1 year because the euro yen is at a 1-year high. You can see the dollar yen is nowhere near that, the dollar underperforming. And the reason the euro is doing so well against the yen, and this is significant, it's because leading up to the election, there was a big nervous issue regarding fiscal prudence and austerity measures to try to control their debt and some of the stimulus they put on in the past. Well, even though the election's over, that's a dynamic that's still in place. And finally, here's the euro versus dollar. You can see the euro is hovering awfully close to a 4-year high.